President Buhari has given his words that the administration will keep a keen eye on food inflation in the new year while giving a strong directive to the Central Bank of Nigeria not to give any money for food imports. Speaking at the 5th regular meeting with the Presidential Economic Advisory Council held on Tuesday at the State House in Abuja, the president emphasized the place of agriculture in the efforts to restore the economy, but agreed that measures must be put in place to curtail inflation in the country, driven mostly by food. All right, joining us to discuss further and give an outlook for 2021 is Damilola Akinbami, Head of Research at Financial Derivatives Company Ltd. Good morning to you, Dami. Thank you so much for joining us. You're welcome. I want to start with Wemkele Mene, his quote. I want you to take a look at his quote. I want to get your take, Dami, if we can put that up, where he says, yeah, there he is. So he says, it's going to take us a very long time if you don't have the roads, if you don't have the right equipment for customs authorities at the border to facilitate the fast and efficient transit of goods, if you don't have the infrastructure, both hard and soft, it reduces the meaningfulness of this agreement with respect to the AFCFTA. Dami, what's your take?
I agree with him because, like you rightly mentioned, 54 countries, of which 33 have ratified. And these countries are different levels of development, different levels of sophistication, and they have different trade policies and regulations. Take, for instance, Ethiopia for a long time has been a closed economy. It's just slowly and gradually opening up its economy to the international community. And even right now, it has prohibited foreign investment into its financial sector. Look at Nigeria also. We know that the government has been very keen on a protectionist strategy, of which there's been a ban on the importation of food items. So, and it cuts across various countries like that. And the main issues, one, weak infrastructure. Most countries don't have the port and customs system is still predominantly manually conducted. So that has led to bureaucracies and delayed transactions. If you also look at even the borders, most of them are porous. So for instance, Nigeria now, we know that the port congestion, especially at the Apapa and Tinkan Island ports in Lagos, have been a major issue that have affected trade. And even like when the Financial Times released the report yesterday, it stated that it cost about $4,000 to clear just a container. And obviously this has affected trade, this has affected logistics and distribution of commodities, goods and services. So definitely it's going to affect the agreement, and the fact that a lot of these countries have different, like I mentioned earlier, different trade policies. You have to come to a point where all the trade policies and regulations are aligned. If not, it will undermine the principles and guidelines of the AFTA agreement. So all these need to be addressed. So it's not going to be a project that would kick off smoothly immediately, but it's going to take a while.
Okay, indeed. You know what? I had a follow-up question about, we have to start somewhere, but your answer already, encompasses that. So let me jump ahead to inflation. President Buhari says that the administration is going to keep a keen eye on inflation in the nation. What do you think needs to be done to bring that down?
I think it's a combination of several issues. So, like I mentioned earlier, the government is really focused on its protectionist strategy, basically eat what you produce. Well, now there's nothing wrong in that, but first of all, what do we produce? If you look at the domestic capacity, it's below optimal level, and that's why we have a high import dependence ratio, and that's because we import basically everything. And look at the exports, are they comparative enough compared to other countries' exports? So it's not just banning food imports, you also have to address issues of insecurity. Every day, almost every week, you hear of a case of an attack in the northern part of the country, you hear of flooding, you hear of one thing after the other affecting food production in the country. So I think the government needs to address these issues. Also, even look at the exchange rate. A lot of countries have used the exchange rate to actually drive the exports. You have to have an efficient price mechanism for your currency to be able to also drive your export strategy. So I believe that you have to do the right things at the right time, because if you do the right thing at the wrong time or do the wrong thing at the right time, it's going to lead to the same result. So it's a combination of policies. Yes, address food imports to an extent, but as you're addressing that, also build capacity locally, also develop the infrastructure, ensure that you have enough industries that can process this. Because what Nigeria does, we actually export these commodities in the raw form and then import the processed goods. So we have to develop that value chain in the agricultural space and even in other sectors, manufacturing, even in oil and gas. So production, processing, distribution. I talked about port congestion, the distribution part. Even if you are producing and processing and you can't move the goods from the factory to the market, then there's still a bottleneck. So I think it's a combination of policies, and that would definitely lead to lower food inflation down the line.
Fantastic. Thank you so much for that, Dami. Okay, you quickly, on your answer on inflation there, you touched on the exchange rate. Well, what's your outlook for, I guess, 2021, exchange rate outlook? How do you think things are going to play out on that front?
I think in 2021, we're going to see more convergence of the different exchange rates that we have towards the investor and exporter forex window, which is currently trading around 392 naira to a dollar. So in 2021, when we see that crossover to 400 naira, there's a possibility of another currency adjustment. And we're going to see the forex rationing policy of the CBN continue, because oil prices are expected to remain low at an average of $45 to $50 per barrel. So because of low oil prices and the fact that diaspora inflows, despite the fact that we expect an increase as the global economy recovers, is still going to be below pre-COVID levels. So there's going to be that constraint. So forex rationing is going to continue. A lot of manufacturers are going to continue using the blended rate of the parallel to the IFX window. And we're going to see definitely the IFX most likely cross 400 in 2021.
Great stuff. I want to ask you about interest rates, Damilola. What can we expect in 2021 with respect to interest rates? And while on the subject of interest rates, the Nigerian Stock Exchange is at a world-beating 45% year-to-date return, one of the best on the globe. Can you talk about what kind of impacts whatever interest rate outlook you see for 21 has on the stock exchange?
Well, I think the interest rate policy, at least in the first quarter of 2021, is going to remain at its current level. So we're still going to see a low interest rate environment. But as the central bank shifts focus to price stability, we've heard about the president talking about trying to bring food inflation down. So that focus to price stability is going to intensify pressures to actually address inflation. And addressing inflation would require you adjusting your current interest rate policy. So we are going to see a gradual increase in interest rates, maybe towards the second half of 2021, but it's not going to be a sharp increase. Towards the end, maybe interest rate, at least if we look at short-term interbank rates, will start inching up towards 4 to 5%. And because of the inverse relationship between stock prices and interest rates, we're definitely going to see stock prices decline. Right now, part of the reasons why we've seen that rally or bubble in the stock market is because of the low yield of fixed income instruments. But as the interest rate starts to increase, definitely we start to see an increase in yields, and we'll see a shift from equities to fixed income instruments, and that would dampen the stock market's performance.
Thank you so much for that, Dami. So putting all this into context, what's the growth outlook for the Nigerian economy for 2021? How do you see that things forming out?
Well, the Nigerian economy is expected to return to positive growth trajectory in 2021. We're looking at a forecast of about 1 to 1.2% in 2021, and from about minus 3.5% for 2020 estimates. And what is going to drive the sectors to look or to watch out for in 2021? Agriculture, definitely, because of the increased government intervention. Civil works and construction, we know that the infrastructure investment drive is really gaining traction. Also, information, communication, and technology, because with that shift to virtual and remote working definitely would benefit that sector. We're going to see more of that. We're also going to see the power sector also show some level of improvement because of the electricity tariff increase, and which is expected to attract investment. So all this we expect to impact positively on the economy. It's going to be a painful and slow recovery. It's not going to be a gradual one. And the risks to this forecast the second wave, which we're already seeing occur in Nigeria, if there's another lockdown that is being imposed, that could delay the recovery process. Also, insecurity needs to be addressed. We've talked about food inflation and whatnot. That needs to be addressed. So these are some of the risks to our growth projections. But 2021 should be a better year for Nigeria, but it's going to be a painful and slow recovery process.
All right. Mix of some optimism there in your outlook. Thank you so much. Damilola Akinbami, Head of Research at Financial Derivatives Company Ltd. We appreciate your insight.